In terms of your track record, so 4 years, if I'm not mistaken, I think it's what, over 200,000 in profits?
On this account, yep. I started it in 2020. I think it was like an initial $50,000 into it, but the 200,000 is just strictly P&L. In fact, I could check it. I'll show it to you. We can check it together. So
We got it.
there it is. I think the overall is, it's like 250 plus. When it comes to prop firms, my take on them over time has been taken as more negative by the industry. It's very natural to say you come to trading and you're like, okay, I have like $500 to $1,000 and I'm willing to try this. And that's like very normal for most first world Western countries. Then if you tell those same people that if you trade slow and steady, they're going to make like 1% to 2% per month, that's nothing. People disagree with me. People fight with me on that all the time. Not my most popular take, but my take on it is like,
number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Before we get into this incredible episode, guys, I want to tell you about our free WAP. Make sure you join in the link in the description, our free WAP community. Inside there, we are doing the giveaways. Now, all you have to do is the giveaway section. You'll see it on screen right now. You just enter the giveaway and it automatically selects the winners after the countdown ends. Not only that, we have a free community chat, which I'm active in as well. You'll get updates on every single episode. There's an application form for the day trading show if you want to appear on that channel, and so much more. Completely free. Link is right there in the description. Click it, join the WAP, join the giveaways. Enjoy this incredible episode. Let's go.
Welcome everyone back to the Words of Rizdom podcast. We are back once again, still the number one trading podcast in the world, thanks to all of you and our incredible guests. What we like to do here is we like to get you as much value as possible from some of the best traders in the world to help you to accelerate your capital, have better psychology, be more consistent, be more profitable. And again, that's thanks to our incredible guests sharing their journey. Talking of which, today we have an absolutely incredible trader. It's my honor to meet him. Finally, we have managed to arrange it here in Miami. It's usually the case. We're not from this place, but we all meet up here or anywhere else. But he has a 4-year track record, which is absolutely incredible. And he shares so much valuable insights on social media. And today we get to sit with him directly and learn from him ourselves. Trader Nick.
Riz, it's awesome to be on here, and it's an honor. I was saying to my wife about this. She was like, "You're going all the way to Miami to do what?" And I was telling her, "I'm going down to a podcast with the Riz, like Riz, Words of Rizdom." And at this point, it's almost like a pilgrimage, I feel like, for traders. Like, you can't be a trader if you haven't done a Riz podcast. So it's my honor. I'm glad to be here and excited to just chat some trading.
I feel like your intro is better than mine.
Well, we're both veterans here, so yours was really good, though.
Yeah, I appreciate it. But Nick, for those, I know there's a lot of people who do know you because you do put out a lot of content and you're very active on the live streams every single day, trading day, which is incredible. But for those who don't, can you just get a little brief background of like how you got to where you are today? And then we'll get into some heavy trading.
Sure. So I have been doing the YouTube side of things since about 2018. And I really got started trading and looking at the markets in like 2015. 2016, I was ending high school. I was getting into stock trading initially. I was interested in like learning about like stock shares and stuff because my dad and somebody who I've traded with for a long time, Frank, who also works in my company, he's kind of my right-hand man when it comes to trading stuff. Him and I have traded back and forth or talked about stocks and markets for years. We dabbled in all sorts of different things. We've done everything from FX to options to stocks and indices, all of it. So I'd say I really started in late high school, and then I kind of got into the social media world in like 2018. And I hope we can talk a little bit about the landscape then versus the landscape now too, because there were no prop firms, or there were, but they were so few and far between. And I remember there was a long period of time where it was like my live stream and Roger Banks, and it was like us two, and that was pretty much it. And his always had more viewers than me, but it was it's kind of changed a lot, the landscape, both for the content side, the community around trading. But I got into it initially. My background is in computer science, so when I got into the stock market and eventually FX and got into just kind of trading all sorts of things, I dabbled in every direction. And my software engineering background really got me into like programming pretty early on and trying to use what I was learning at school to try and take on the markets a little bit. And it was way harder than I thought it would be. But software is kind of like how I combine two interests. Like I like building stuff like that, and I like trading because it's like a puzzle to solve, and using tools kind of got me in the direction of what I have continued to do, is use a lot of like trading software and like build indicators and tools and things to kind of analyze the markets. But yeah, I started the YouTube side of things in like 2018, and then eventually started selling the tools and software tools that I had built over time, and have continued to build my company A1 Trading. So between that and then as you mentioned, like the daily live streams and things like that, I've just been trading and sharing kind of my journey on YouTube since then. So it's been a lot of fun.
It's kind of exactly what you touched on there. Let's go into that first in terms of the contrast between trading back then. It wasn't even that long ago in the grand scheme of things, but it feels like it, right?
It's not that long ago, but it feels so different. The trading space has just gone so much further in terms of the content. And, to be honest, Riz, it's kind of like people like you, like content that has really leveled up the game. Like nobody's doing it to this level. Your podcast is awesome for that. You're bringing together communities, but there's also just been so many different kind of new developments in the trading world. The prop space has really transformed things. The crypto craze really transforms things too, even though I'm not a crypto trader or anything like that. Like just the massive like exposure that some of those big hype things like prop firms and crypto and like meme stocks, like those sorts of things have brought a huge amount of like good and bad with them, but it's changed the landscape, I think, a lot. There's been so many different businesses that have come and go within that environment, like the crypto world and everything, there. And so I think that whenever you get like a big tied in, tied out effect, the truth is over time, it's really good for the industry itself, because then you suddenly have like this big change, and then there's bad actors and good actors, and then the bad actors get washed away, and then you're left with over time, like kind of a progressing environment. But there was a period of time where there was only a few prop firms in the space. There was not that many YouTubers in the space that were, I don't want to say like high caliber, but there was just very few like influencers. And that can be taken good or bad. But what I'm talking about specifically is like very, very real traders in the space. There weren't that many early on. They've kind of really picked up over time, and it's been cool to watch the industry transform.
Definitely, and it's like you say, there's good and bad. One of the good things is that there's a lot of opportunity, a lot of growth, a lot of development and upgrades in all different areas, whether it's businesses or content. But equally as well, as you said, like the negatives are there too. So for example, with the more prop firms, yes, you could get more capital, for example, different options that might fit you as a trader better, different rules that might fit you versus another prop, for example. But also we've seen right now, like over the last 6 months, we've seen the negative of it, of how, competition in business is a good thing, but if not treated correctly, can be a very negative thing, which then unfortunately impacts the end user, the traders at the end of the day.
Yeah.
And equally, the positive of being able to leverage a prop firm for capital, but equally the barrier for entry coming way further down than it's ever been at the same time. Because like when I was coming up, very similar time period to yourself, it was like, okay, let's say the same money I'd put on a prop firm challenge, let's say £500 for me, would be like 100K challenge basically, I would put into a broker. And therefore, either the mentality has to be, I'm going to try and flip this, and it's not really going to work out, and you end up blowing it. Or the mentality is, I'm going to trade this small and grow my skill set.
That's so true. That's so true. And just to add to that point for a second, when it comes to prop firms, in terms of like my take on them over time has been taken as more negative by the industry. But the point you just made was one of the biggest positives that I always talk about with prop firms. It's very natural to say, you come to trading and you're like, okay, I have like $500 to $1,000 that I'm willing to try this. And that's like very normal for most for like most first world Western countries, like $1,000, $2,000 invested into something like that. That's like maybe available to most people. And then if you tell those same people that if you trade slow and steady, they're going to make like 1% to 2% per month, that's nothing, like in terms of the return. And I'm not saying it's nothing as in like 1% to 2% is small. That's actually quite a good return. I get a lot of slack on that on my channels for talking about like very slow and steady conservative gains over time. But we can go down that rabbit hole in a little bit. But in terms of the prop firm space, what I think is the coolest thing about the prop industry is that it has allowed people to embrace the slow and steady, like you're mentioning, because you're saying, okay, well, if I take that $500 to $1,000 and I take this prop firm challenge very, very seriously, suddenly I'm going to have to use all the good risk principles, because now I'm trading maybe a 100K account or a 200K account, and I have to take this way more responsibly. And I think that is one of the biggest positives. There's so many negatives, there's so many positives. I think that the pros overall do outweigh the bads, but I think it's important to be critical to an industry, because again, you don't get the tied in, tied out, and it get better without like calling out some of the craziness. And I think that the big kind of washout in the prop firm space in the last year or two, it is painful in the meantime. A lot of people have been hurt by that. A lot of people who have lost their accounts or just invested a lot of time with the company, and that company is no longer in business. That is a painful component, but it's like a growing pain for the longer term. Like in the longer term, those companies that go away will be the only ones left standing are the really quality businesses that will stand the test of time. And another example that I talk about in my videos often with this topic is like the crypto world. Like I think that if you take a look at crypto before and after, like the incredible, like kind of bubble that happened in 2020 and 2021 when everyone had stimulus checks and they were just pumping it into whatever meme coin. I think a lot of those, like the NFTs and getting further out on the risk curve with all this stuff, pushed it to an extreme. And then there was just so many bad actors in it. But then when it all kind of tumbled and it gets, pulled away, I think that, and I sound like a crypto boy. I really am not very much into crypto, but like, I think it will be good for the industry there too over time, because it will expose kind of when the tide goes out, who's not wearing swim trunks. You know what I mean? Like, so I think same thing for the prop space.
Definitely. No, it's a great analogy, because I think like with crypto, people can understand it a bit better because they've observed it for a bit longer. And because it's more so like you're investing into something versus I'm buying a product or service, your expectancy to lose is a bit higher than it is in comparison. Because when you buy something from, say, a store or website, wherever it may be, you're expecting it to be fulfilled and have the satisfaction of what you're buying. So when you then don't have that satisfaction, it becomes a lot more an emotional response, rightly so as well. But I think what you said is correct in terms of looking at the space and being cautious, looking at the cons. I think it's very important to do that, because I think that's where people get caught off guard. It was crazy to me, probably as soon as like maybe 6 months ago, maybe 8 months ago, when my Forex funds had their situation. It was crazy to me how many people believed that some of these prop firms were using real capital.
Yeah.
Even though majority of them even say that they're not.
Yeah.
But it was just crazy to me, because at that point I thought it was just a given thing, like a given understood thing by the entire industry who look at prop firms and understand that it's all simulated and demo environments.
Yeah.
But it just goes to show that there's still a lot of learning and education. I think, like you said as well, like calling things out doesn't necessarily mean that you're trying to be negative, right? You're just calling out for knowledge to be shared in a sense.
Let's take a break for a minute there, guys, because I want to tell you about the #1 prop firm in the world, and that is Alpha Capital. Let's get straight to the point. You want a prop firm that consistently pays out, that has its own strong infrastructure, meaning its own technology and its own brokerage, which means that you get the best platforms to trade on, as well as having institutional experience as its founders and leaders. Now, let's just quickly look at the Discord here for the payout proofs. You're talking 6 payout there, 7 payout there, first payout. Look at all these payouts in the Discord. Make sure you go check that out. Now, you can get 20% off all your challenges with Alpha Capital using the code RIZ. That's capital RIZ. 20% off, thanks to the podcast and thanks to Alpha Capital. Go secure your challenge today. Now, Alpha Capital has also joined the future space. Alpha Futures has launched and is here today. Now, they are revolutionizing the space by offering the very best drawdown in the entire industry, including the 100K accounts and 150K accounts that they offer, and that's at 4%. Absolutely insane. On top of that, Alpha Futures does not trail your equity high or low for the day, meaning that if a trade goes back to break even, you do not have a chance of losing your account because of that. That's thanks to Alpha Futures. On top of which, they have no buffer zones or 60-90 rules on withdrawals like other prop firms in the future space have. Alpha Futures is here to revolutionize the space with the same team behind Alpha Cap. So make sure you use my code again, RIZ, all capitals RIZ, for 20% off your futures challenge. The links for both the cap and the futures will be in the description below. Check them out. Secure your challenges with the very best. Alpha Capital and Alpha Futures. Now let's get back to the episode.
Well, I think it's like if you have a belief in anything, if you can't take any sort of criticism, then your belief is not really built on anything. It's not a very strong, belief. And I think that what you mentioned about the realization for the industry and what has admittedly really hurt the pitch, I think, for prop firms in the last year or so has been the realization that is not real capital, that these are simulated. If you look at the model for, if you were to put random people on the internet on an A-book, broker and book all their losses, that would just not be a sustainable business model. I think it's better that you get that out into the open and say like, okay, well then what is sustainable, and like as a community sort out what is realistic. And I think that some prop firms out there are doing better jobs than others at being, just transparent about it. One that was way ahead of her time, you actually spoke with her before, was Jessica from Funding Talent. She's actually a friend of mine.
Really?
Business friends before she kind of bowed out of the trading world. But she, back in the day with Funding Talent, she was like one of the first people that at least made an effort to say, look, you're trading a demo account, but we'll pay you. And people memed on her so bad for that. And then all of them, when years later, when they all got spooked by, the CFTC going after all the different firms that have had troubles, I think that there's something to be said for the more transparent a prop firm can be, the better I think it is. And again, I think in the long term, it will be better for the industry to go through that pain, that growing pain, and then come out with legitimate business models, and innovative business people will create a better system. They'll improve it, and everybody will be happier because of it. So I think that's I think that's the story, how the story ends. And as you mentioned with crypto, we have had the luxury, a little bit more hindsight, where we've seen the story play out longer, and now crypto's starting to come back with a little bit more regulation. They just launched ETFs for Bitcoin. I think Ethereum is in the works now for exchange traded funds on the stock market. So you might say, well, that's more regulated, defeats the purpose of crypto. But in some ways, I think regulation is good, especially for unknowing investors who are just getting into this stuff.
Have you ever used prop firms yourself?
I have. I've never really taken a lot of time to really be dedicated to them, because if we go back to just like my story, I have kind of a different story in terms of like my exposure to trading. When I got into trading, I had started a few businesses before that, which set me up to never really be in a place where I like desperately needed capital.
We had vending machines, right?
Yeah, vending machines. I got rich off that. No, I'm just kidding.
Landscape?
Yep, did landscaping.
We'd be surprised. Well, how much money was in the vending machines? Because I sometimes see clips, and I see Warren Buffett started with vending machines.
Did he really?
Yeah, he started. Basically, I was at this role once.
So you're saying I'm like Warren Buffett now?
Could be, could be. But I had this role once where I wrote an article on Warren Buffett, and I'd never I'd known who he was, right, at that time, but everyone knows who he is, right, investor-wise, but not how he did it. And literally, he was very similar kind of to your story in the sense that he was very early with the entrepreneurship. Yep. He started with a paper round, and he collected everyone's details of who wanted a paper. And he said the mistake he made was he gave it to the shopkeeper he was delivering paper for, instead of either selling it to him or starting his own. That was, he said, it was a mistake. After that, he took that money and invested into vending machines and pinball machines that you put in barbershops and laundromats. Yeah. From there, I can't remember what the next step was from there, but essentially he just scaled from there. That's literally his journey. He started from
vending machines and then become, now he's like one of the richest people in the world.
Well, and that's the thing is, I think that coming to trading, I had one of the biggest accidental blessings was starting businesses before trading, because I had lost money in businesses before I got into trading. And so when I approached trading, it was immediately cautious, because I was like, I've heard horror stories about people losing money. I've lost money in businesses that I started. And my business, short, brief recap on my business career before I got into all this stuff was, I started, as you mentioned, vending machines and landscaping, and then I started buying and selling like equipment, like tractors and ATVs and pressure washers and things like that. And then I worked my way up to even there was this construction company that was the owner had passed away, and his wife was selling off all the assets. So my goal was to buy it all and sell it all for fair value after cleaning up the machines. And these were like big time stuff, like excavators and a bulldozer, and it was going to be a big thing. So my dad and I spent like a whole summer on this, and one of the machines that we had invested a lot of money in ended up needing a ton of repairs, and it totally ate into the whole profit. So we spent the whole summer, and I think we like broke even on the whole thing. Wow. So the point when I sharing that is like when I came to trading, I had learned like hard lessons before, trying to get into something too fast that I didn't know everything about. And I also had some capital built up from different businesses. So I never really needed the prop firm space, but for my personal story, but I've had a lot of like interactions with and working with like prop firm CEOs and different people just who have partnered with my business and the content that we do as well. So I feel like I've learned a lot of like the business side of the prop firm space, but I can't say I have a ton of experience as like a prop firm trader, just because of my kind of unique background to approaching trading.
Yeah, definitely. And what were in the start of your journey? What you had that experience from business and entrepreneurship, so definitely very valuable, right? Especially in terms of risk, in terms of losses, in terms of the reality of what trying to be successful looks like. But what were some of the key mistakes or struggles you faced at the start of your journey? Yeah,
so trading, when I first got into it, I mentioned that I had really an interest in software engineering. That's what I was doing at school, and I wanted to like build indicators, and I was interested too in building like trading robots to help me, find opportunities in the markets and that sort of thing. What actually I did, which I think is a little unusual to the standard traders, I didn't jump into a bunch of live accounts like when I first got started. I did create a live account, and I think I put like a couple $1,000s in it, and I didn't blow the whole thing. I was still going to just be like super conservative with it, like trade really slow, because again, I had past experiences where I've like jumped into something I didn't know enough about and lost money. So I fortunately kind of had that conservative approach. But what was actually like my biggest struggle when I first got into trading was I was immediately really interested in backtesting, because again, I was building this code, like writing stuff. And so I would design these like trading robots and test them. And what I found through that backtesting was, you see all these people on social media, even back in this time, like 2016, 2017, people were touting the like get rich quick lifestyle. And I was like, I'm not finding it in my backtesting. Like, where are these magical systems that are creating 20% per month or things like that? And the more I backtested, the more I would find systems that would work well. And then when I would expand the parameters to like when I was testing those systems, they would break somewhere, and like the account would go to zero in the backtest. So what I found really quickly, which was a big blessing and also almost made me quit trading, was I was doing all this backtesting and finding out that it's really hard to make any sort of large returns with a purely mechanical system. And so, again, that was really discouraging for me, because I was like, this is not going to be, everybody I'd heard from about trading was like talking about how much money you can make from it and how, it can be incredibly lucrative. And it can, but what they don't tell you is you need capital, you need patience, you need slow and steady, and you need to be able to, most importantly, handle drawdowns. So through all this back testing, I was really finding that, drawdowns are like the number one kind of thing to look for when you're testing a system. It's like, how bad can it get? Because every system can look really good. If you take a trending strategy, you could apply simple moving averages and trade a moving average crossover. And if you only back tested times when the market was trending really well, you'd look like you have a genius system. But if you take that same trending system and you put it in a choppy market environment, it's going to get chopped to pieces. And so how bad is it going to get? That was like my back testing kind of obsession. Was I started realizing like, and it probably saved me a lot of money. I say this all the time, like this totally saved me a ton of money in trading, because I realized I can't find profitable systems easily. This stuff cannot be easy. And that served me really, really well, because while it still took me a long time to kind of get to a profitable standpoint. I knew early on what I was up against. Like, this is hard to like find in the data, like just back testing simple systems. And I was back testing mostly on just MetaTrader 4, writing robots, writing indicators, testing like their effectiveness. And I think that really, for anybody who is listening, who is trying to get into trading, or you're new to it, stop everything, spend time back testing. You will never regret spending more time on a back testing, kind of simulator. And there's, plenty of companies out there that offer that sort of thing. I would highly recommend you look them up, find them for yourself. And it's a game changer, I think, for anyone.
We're going to go into some topics that you touched on there, but did you see the reel I posted today?
No, what's your reel today?
You're going to laugh. 1 second. Where is it? Make sure the volume's on. Yeah.
Never backtested before because there's no pain in that. How I got here is from the pain.
Interesting. Did he say he's never backtested before?
Yeah, he said he's never backtested because, and the concept, it makes sense, right? He's not trying to say don't backtest.
Yeah.
He's just telling from his experience.
Yeah.
He was saying like, and this is a verified like 150K payouts trader on props. Yeah.
Yeah.
But he's basically saying like he never backtests because you don't experience the pain.
That's true.
From collecting this data, that pain makes a difference is what he's getting at. It's like you can't replicate that without being live.
See, this is what I push back on though, because a lot of times I hear people make the point that don't trade a demo because you never learn any of the skills, and I love this topic because I might hurt some feelings here, but this is my real answer to that. I made a video recently about why trading is really, really hard. Like, why is it actually that difficult to make money? And in my opinion, it's not psychology, it's not discipline, it's not like, oh, I'm just making silly mistakes. Yes, those things will stop you from being a profitable trader, but that's not the hardest part, in my opinion, to becoming profitable. The hardest part is actually finding an edge. Like finding an edge. If for example, if you did have a system, let's take a really quick example. Let's say you had a quarter, and it's a weighted quarter, and on one side it's 60% chance that it will be heads and 40% chance that it's going to be tails. So if you knew that you had an edge by flipping that, you would bet on heads every single time. Who wouldn't? But you would bet small because it could still be the 40%, right? So you don't want to like bet all in. You want to like risk small. That's one part of finding an edge. Is even if you have an edge, you still have to manage risk, make your risk small. But on top of that, the obvious answer would be always bet on heads because there's an edge there. And it would be a lot easier to stick to that strategy if you scientifically knew the odds were 60%. So finding that edge is the harder part. If you knew you had an edge, it's easier to keep flipping the coin. You're not going to stop. Like even somebody who's, an anxious person would say, well, still the scientific odds are going to tell me that it's going to hit 60% of the time. So I'm going to keep flipping the coin. So in my opinion, I think what most traders really struggle with is actually taking the time to backtest, find a system that actually makes money through different market environments. And if that is if you get to that point, you've put so much time into backtesting and finding that system, you're going to have a little bit more confidence at what you're doing. And if the psychology is still giving you an issue, reduce your position size. Because high position size, big positions, I don't care how much of an edge you have. If you have big positions on, it's going to be hard to sleep. It's going to feel crazy. The mood swings are going to be high. But if you reduce that position size very small, you've done your backtesting, you've done your homework, it's easier to stick to a system. That's my take on it. I know it's a hot take because psychology is very difficult. Don't get me wrong. There are still swings. Drawdowns are painful. But that's not the biggest barrier, in my opinion. The biggest barrier is you didn't do the work firsthand to build a system.
It's interesting you say that because very recently there was another reel that I put out, which was from a roundtable. I think the last roundtable we did with, his name's Bernd. Skorpinski is how you say his last name. I've had to learn that for the intros.
I'm sure you've learned a lot of last names.
I have, I really have.
Like handles.
Yeah, but he's a great trader as well. Again, number one on FTMO leaderboard, a lot of payouts, trading some A book capital as well as still with prop firms. But he had a very, very similar analogy to yourself, to be fair. He basically said trading psychology is BS. Like, it's not important. What's important is your skill set, essentially the edge. Like, you need to raise your skill set to a level and psychology won't be a problem. And that was a hot take, like you said. A lot of people were like, my opinion has always been that there's no right or wrong answer.
Sure.
There's positives and negatives to everything. You look at it and you try and be objective, and I think that's the job of a trader, which is probably why most people fail, because they struggle to do that.
And to add one thing to that, Riz, I think that I guess I can redact, like, I don't think trading psychology is worthless. I think it is still a big barrier for a lot of people.
No, you said it was, no, you didn't say that. I was saying that's his man. That was what he said.
Gotcha, yeah, that's an even stronger take.
That's what he said. You said the right thing where he said, like, you are still going to have the psychological
because drawdowns still suck.
100%,
I've been doing this for years. Drawdowns are still no fun when they happen. Nobody enjoys them, and
Because I feel like with the backtesting thing, for example, data is very important, and I think it's definitely beneficial. It's not like completely useless. I think it is beneficial because obviously you want to see what the past data tells you. I think the hardship is like, what I feel the problem becomes is that majority of people don't backtest in the first place. So that's one thing. But let's say the ones who do. What I found through the years of not only speaking to traders but even observing them is that they get too reliant on the back-tested results, which then they don't replicate live, and that builds a frustration in them, and their emotions get very heightened off the back of it because they feel like they've done work. And again, with the back-testing, the issue for me has always been that it doesn't include the psychology, but more importantly, I think putting psychology to one side, it also, even though the softwares have upgraded over the years, it doesn't replicate that same momentum, that and time, of course, of, let's say, a 4-hour candle, right, or volatility in the market,
right.
So therefore, it can become slightly tainted data because of that, right? But it's still data nonetheless, data you didn't have before, so it has its benefits. But I feel like the big part is that they take that data and they go, it works, right? This is it,
Yep.
And then they go and replicate it. And don't get me wrong, there'll be those who do it poorly, right? And they don't actually follow the edge they've just collected data on. But there will be those who do it and then they're not getting the results, and then they build this very strong frustration, confusion, and then they probably go in like a spiral for a while of doing the same thing over and over.
Yep.
Let's go find a different edge because that one doesn't work. And back and forth.
Well, and edges can exist in certain market environments. So I was talking about that earlier too. Like right now, I've referenced this tweet that I've seen kind of recently. Somebody just said, my strategy has been working impeccably. It's basically wake up, buy the NASDAQ, and you're done. And if you look at the NASDAQ in the last like year and a half, that's been an incredible strategy. But if you expanded your testing to 2022, it would have been rough because I think the NASDAQ was down like 38% peak to trough. So that would have really challenged. So I think a lot of times people have like a recency bias too, where they will really kind of study a system that's working very well. Like if your system was telling you to go long the US dollar in 2022, you were like a hero because that was like the easiest time in the world to be long the dollar because the Fed was just raising rates. And there is also, as you mentioned, I think a really good point is there's some like in the moment, if you're manually executing, there's some skills that come with that just from putting in chart time. I know I recently did an interview with Tory Trades and we talked about that a lot. We talked about like just how important like simply staring at charts for countless hours can feel frustrating and pointless, but it's hard to explain. But there's some level of just like you almost like download it into your system the more you just stare at a chart, and especially if you're studying particular assets, like if you trade I know gold is like the crowd favorite, or if you're trading specifically the NASDAQ or the euro against the dollar, like just getting to know a particular chart. There's some level that the human brain does that I can't quantify with words. Like you just build a discretionary like skill set just by studying something that you can't get through backtesting. So backtesting is not like the all, end all be all for me either. There's a level of discretion in my own trading. But I think if I were to, encourage everybody listening to do one thing, if you've never done it, spend the time backtesting, and you will just very quickly realize trading is very difficult when you actually try and build a system and apply it through different market environments. And that for me was a huge game changer, because it forced me to really take a step back to what I was doing and just being like, let me rethink this, because this is clearly way more difficult than I thought it would be. So
What kept you going then? If you had that realization, what was it that said, okay, let me keep doing this?
Let's take a break for a minute there, guys, because I want to tell you about our brand new sponsor, WOP, a one-stop shop for all things digital assets and digital community. Now, if you're a trader out there looking to elevate your trading game, which is why you're watching this podcast, WOP is the place to find your community and find your mentor. There are tons of free trials that you can take advantage of today, so make sure you go check those out. Talking of which, on Words of Rizdom and Day Trading Show, we're hosting a free community on WOP. So make sure you join those. The links will be in the description. Now, for the creators out there, WOP is the one place that you need to be, because they're a community-driven platform and they handle all aspects of your business. You can customize every element of your offer using WOP. You can either use their in-house apps or even sync your Telegram and Discord. One of the most important things that creators suffer with and worry about today is having a payment processor that won't shut them down. You don't have to worry about that at all using WOP. And just to add the cherry on top, they drive demand and subscriptions to your business just because you're hosted on their marketplace. It is a complete no-brainer. Now, there's a link in the description to book a call directly with them so you can get your community set up today. Check that out. Let's get back to the episode.
I think I just started to actually really like markets. And I think that that's like also really important is there are easier ways out there to make money than trading, especially if you're not somebody who already has large amounts of capital. So you kind of have to be a little insane to keep trying to trade, because you are actually fighting an uphill battle. Again, not my most popular take, but my take on it is like going for modest gains, like 2 to 4% per month, let's call it, somewhere in that neighborhood is very good to do consistently over time. People disagree with me. People fight with me on that all the time. You can do 10%, you can do 20. But respectfully, if you ask people for track records, people don't do 10% per month consistently for a long period of time. Nobody does it on a regulated broker. And that's not even being, negative or pessimistic about it. It's just, for people who are aspiring to be traders, I think that that's a really, really important topic. Just like when we talked about with the prop firm stuff, like pointing out the negatives. I'm not trying to be negative about, the trading industry, but so many people tout so much stuff. They tout, winners and profitability. And when you get onto the topic of like trading returns, you can say whatever you want, but to show is very different than to say. And so I think that when it comes to the trading space, that's another thing I encourage people a lot to do is ask for track records, because I believe that if people are selling things, especially knowledge or education or something like that, that's kind of a prerequisite in my opinion, but that is definitely not the standard for the industry, because very few people do it.
Definitely. And were you surprised when Tori, it wasn't really an application, but I said, put herself up there for the track record challenge?
I wasn't at all.
You wasn't?
No, because she's done broker logins and things like that. And there's people in the industry who do it. I think Tori is probably the biggest in the industry that did it. And I was really excited when she stepped forward, but I wasn't surprised. And I told her that right as we got on the call. I was like, I'm not surprised that you're here. I'm glad that you're doing this, because it's going to be awesome for the industry, because what she says will go way further than what I do. So her kind of bringing attention to the trading transparency that I had talked about and was hoping somebody would match me on was awesome to see from her. And I do hope that that becomes a bigger thing. And I hope that just like with the prop firm space, kind of the community waking up to what can go wrong. Like if you invest all your time in, a company that's not built on solid ground, Same thing for learning from influencers and traders that, you know, if somebody is selling a course or selling signals or selling a software or selling whatever, I have no issue with that if they actually do what they say they do. But I do have an issue with, you know, I when Tori and I were talking about this specifically on our call, we talked about how, you know, if you think about like that same person who has $500 to $1,000, like that's what they've got to get into this new side hustle, go into this venture. That person has $500 and $1,000, but they also only have a very limited period of time per day available to them to learn something new, to start a side income for themselves. And to me, the important thing there is that's why I value like my audience. I'm sure you value your audience's time a lot. Like you want to bring them great value listening because this is their limited time per day. I've been a student. You've been a student. You know, you've been working. I've been working. Like you have limited periods of time in the day. We're all busy. So to me, the concept of somebody like promoting and selling something without showing any proof, how do you know you're not just wasting your time and only enriching that person? You know, to me, that seems kind of, if you really respect your audience, I feel like it's important to show some transparency and legitimacy. And just basically by doing that, you're saying, look, I respect and am thankful that I have this platform and this audience. And in return, I'm going to show you some vulnerability. I'm not the world's greatest trader. I have down periods and losing streaks. And I went through a public drawdown for a whole year in 2022. So like, I'm not the best in the world, but I respect my audience and I'm thankful that I have it. And so I want them to know that they're not wasting their time listening in for hours per week, you know? So I think that it's kind of a respect thing, as well as also completely candidly, it's good for your business. If you can show it, show it. If you can't, you can't. You know what I mean? It's pretty binary like that.
Definitely. And the reason I brought up Tory Trades originally was more so because there's people who obviously doubt her, right? There's people who've doubted her for a while. And yet she had already, at that point, they were still doubting when she was doing the broker logins. And then obviously she's provided the statements to yourself, for example. And it just, don't you find it interesting that even when you do show proof, people will still doubt you nonetheless?
Well, and it's that, and then, you know, I get people will say, you know, your returns are very low for the amount of time you invested in this stuff, which is so true. I mean, well, not really. I think my returns have been pretty good, but it's not like I'm out here making hundreds of % per year on my trading, which is, I think a lot of times I get those outlashes because people are a little disappointed that if that's the only track record, you know, that they've seen in a while and it's not really like life-changing percentage returns. I think that sometimes makes people a little upset. That's one side of it. But yeah, also with Tories and you know, I also had one other gentleman, Mark, who showed his, you know, and people will always kind of point fingers, but and say this or that, or it's not that good, or, you know, she took this much risk, or his drawdown was this, and but the thing is, everyone who, if you asked anyone to show their track record and show a track record, there's going to be blemishes on everybody's trading performance. I've never seen somebody just generate 10% plus per year or per month without, you know, serious drawdowns to go with it. So I think it was really cool that they both came out and did that. And again, like I said, I hope more people will.
Did you have anyone else reach out to you?
Not yet. I've not had any more. It's there's been, and my requirements for like my little challenge that I did were pretty steep at first. So I may come back and do another round.
What were the requirements?
The requirements were 2+ years on a regulated broker.
Okay, that's the one that.
Yeah, whoa. Right, because a lot of people don't trade on a regulated broker. And then finally beating the S&P 500, which has been difficult in the last few years because it's just been straight up.
It's been doing it good, yeah. That's true. In terms of track record, obviously a track record is a track record in terms of like broker statements and so on, and long-term success being shown, you know. But what about people who live stream or not just live stream, but live trade, you know, in their communities and stuff? Is that, though maybe not on the same caliber, is that another form of like proof, social proof in a sense? It's
better than nothing, you know. And I think that if somebody is pulling up a live stream and pulling up their account, that's super credible by itself, as long as it's not you know, there's games you can play with MetaTrader. Everybody knows about that. You know, you can kind of fake MetaTrader. But if it was like something like if you pull up like TD Ameritrade or, you know, if you're in the UK, like 8cap or something, like on their platform, you know, if you're on like a legitimate broker, I think that's super credible. I think that's way better than, because I think that's also, you know, if you have skin in the game and you're showing accounts, that's another way of just saying like, look, I do what I talk about all day long. I'm not just blowing smoke.
And in terms of your track record, so 4 years, right? And with that time, you have, if I'm not mistaken, I think it's what, over 200,000 in profits?
On this account, yep.
Yeah. So what did that look like? What was the starting point? Was it just scaled the whole time? Or was it you've injected more capital?
I've added more to it over time.
Okay.
I started it in 2020 with, I think it was like an initial $50,000 into it. And then I've just kind of added periodically another 50K like every few months. And so it's grown both from, but the 200,000 is just strictly P&L. In fact, I could check it. I'll show it to you just so we can check it together. Hold on.
That's great. Because I was about to do, I realized the way I made that sound was more so like you've got 200K balance.
Yeah.
So I was thinking, you're adding 50K in.
So
we've got it.
There it is. So there's like the 1 year, but I think the overall is, it's like 250 plus, which, you know, to be fair, Riz is not like, it's not like millions, you know, like I mean, it's real, and I'm not, but I just want to kind of like showcase that even, you know, I've been doing this for a long time. This account is not like up millions and millions of dollars. I've built it over time. I think over the years, I'm hoping to get it there. And, you know, we have some good market environments for the next couple of years, then I hope I get there. But, you know, I hope it just offers some level of transparency with it.
What style of strategy? Because I know you mentioned earlier about mechanical. You know, the data you would collect would be more so based on a mechanical strategy. Is that what you're implementing on that trading?
So I do kind of a mix between technical analysis and fundamental analysis.
Yes.
So I do a lot of economic data stuff. So I'm watching all of the latest reports like GDP figures or PMIs or inflation statistics. You know, this week we had the producer price index and the consumer price index. So I'm looking at that stuff, but it is still very systematic. What my company kind of specializes in, the A1 trading side of things, is we build specifically tools that help traders who are trying to get into the fundamental analysis side of things with different data scanners. So if you want to pull up GDPs of different countries and plot them on a chart against different time frames or different, you know, time periods, or if you want to look at CPI over the last 12 months, we build tools that help traders to do that. So my software engineering side kind of turned into a business where, you know, I'm in this stuff all the time. I might as well kind of build these tools for myself, and I've sold them along the way. And so there's a couple of us that are on our little dev team that build these tools for traders. And so my systematic approach to that is, because I think a lot of times fundamentals are really daunting to people to get into. Like, what are you talking about? The CPI is higher than expected. What does that mean? And there's so much to it. And there is so much to it. It's too much to keep in your brain. So I mentioned Frank earlier. Frank and I kind of set out on this mission to build this tool that would help us to systematically and categorically look at all these data points and have them on like a heat map in front of us. So when you take a look at the CPI print, but then you also have it lined up against all the other important metrics like jobs data that just came out, or again, like PMIs or whatever, and kind of assigning scores to each of them, that's kind of been what we've built as our flagship project, the Edge Finder, which has kind of been our main thing. The goal is really to help simplify tools, and I know this is starting to sound like a plug, so I'm not trying to plug it at all, but it is kind of how I approach the markets, is very, very fundamental analysis first, and then very simple technical approaches as kind of my entries and exits. I think I kind of often say that like my reasons for entering a trade are usually fundamental, but then my timings are more simple technicals, and I stay mostly on like the 4 hour, the daily chart. So I'm more of a swing trader. I'm not really a day trader or a scalper or anything, just longer term. kind of, I think my average trade length is like 1 to 14 days. Just depends on what is happening.
No, that's, in terms of indicators for fundamentals, probably a big interest for that. So what would it do in terms of, like, obviously you said data, so is it more so collecting that data, showing correlations, showing...
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZella. The reason why TradeZella is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZella is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZella is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
Yeah. So basically, if you think about the CPI report this week came in lighter than forecasted. And then the producer price index, another measurement of inflation, came in this week. And I don't know when this podcast is getting published, but this week, today's June 14th when we're recording this. This week we had some inflation data that came in cool. And the question is, how does that impact the dollar? How does it impact the euro? How does it impact gold? How does it impact the S&P, the NASDAQ? Well, traditionally, the idea of inflation cooling would mean, the dollar index could get weaker because rate cuts are going to potentially be on the horizon this year. If that happens, then suddenly gold looks stronger. So we can, kind of logically go through it manually, but we've built our tool to take in all those data points. So it's grabbing data from all these different sources, and then it's assigning scores based on beats and misses in the economic data. So we've really kind of built this tool to assist us in finding our own trades. So when we get an inflation score, that's one read, but then there's all these other different metrics, and we kind of take a summarized view, and that's how we get our kind of setups. And I'll send you an image if you want to show it on the screen or whatever, just to give people a reference to what I'm saying.
Yeah, no, 100%.
Visually, it would be a little easier to understand.
Yeah. And the beauty of having a track record, by the way, Nick, is that you don't have to say, I don't want to plug stuff.
Yeah,
right?
Sure.
Because then you're allowed to. It's like a pass.
That's fair. It's like your hall pass.
Yeah, it honestly is. It's like a pass, because then, you're verified. You can say whatever the hell you want.
Right.
No one can say anything different.
That's fair. That's fair.
But no, it sounds interesting. The reason I say that is because, and the reason I asked is because fundamentals is a huge element of the markets that a lot of traders that I've experienced anyway don't really look at, don't understand. Me being one of them, I recently started to learn, thanks to the podcast, I started to learn more, because the more fundamental traders
I'm sure
I have
you've run into them.
Yeah.
What would your take, because you've interviewed a lot of them, fundamentalists can be, and I'll say this, I'll self-report here, fundamentalists can be a little bit holier than thou with their, look at...
Some can, yeah. I think it's because obviously they have... The way one guy explained it to me, and is a good friend of mine actually, and when he said it, and he was just saying it in terms of him, I was just asking him, why do you like fundamentals? And he said, I like to know where the money's going, or how it moves across the world, right?
Yep.
Because then that's how he broke it down. That's like, essentially fundamentals is explaining to you how large sums of money move across the world and why.
Yeah.
And as soon as he said that, I realized that, it's so true. And then why, as a trade, not just as a trader though, really, as an individual who lives on this earth in this world of money that basically makes the world go round, why wouldn't you want to know exactly what's going on and how things are moving and why they're moving, right?
Yeah.
But then as a trader on top of that, then again, it's like a no-brainer. Why wouldn't you want to know? Because at the end of the day, even if you're a technical trader, learning fundamentals is not going to hold you back. It's only going to add another layer to your process.
And I think something to add is I'm a big believer. I've done this long enough, and I've also nowhere near the size of your podcast and to the success that you've had with it. But I've done a lot of different interviews with different traders, and I've actually come across profitable traders of all different walks of life, short time frames, long time frames, technicals, fundamentals. So I kind of don't subscribe to the toxic view of this strategy works and all of the rest are bad. I've watched so many people come and go in this industry. Some people stay because they found something that works for them, and that's all that matters. But most people, sadly, will go away from this after they realize how difficult trading really is. For me, I like fundamentals because I find it to be something that just very much logically can be placed over the market to really understand why forces are pushing things a certain way. We all know when you go to the grocery store right now, things are way more costly than they were before. And that's not just something that traders pay attention to. That's absolutely everyone on planet Earth feels that force, and it makes its way into pushing the markets in different directions. If prices are going up, there's a possibility that that could lead to consumers really feeling a pinch. At some point, consumers feeling the pinch could lead to business profits being deteriorated a little bit. And if that happens, maybe you see, a change in the stock market. And so I think that, I put out a tweet this week specifically, or an X post this week, saying, if price action is all that you needed, why is it that data coming out, the price spikes after the data comes out? When a CPI print comes in lighter than anticipated or hotter than anticipated, the price moves after, not before. So fundamentals clearly are a why the market is moving force, and then the price can kind of paint the story that is being told from the fundamentals. So I think where sometimes people get it a little twisted is they go, oh, fundamentals are just, absolutely the best and technicals are worthless. Or they say technicals are everything and fundamentals are just, oh, it's voodoo magic that the market makers are telling you. I don't go either way. I think that price can tell a story, but fundamentals are kind of the story behind the story being told, if that makes sense.
Well, they kind of coincide with each other. They overlap, or they rely on each other in the sense that the way I see it is the charts are the representation of the buying and selling, the emotions most of all of the sentiment of traders. And the fundamentals plays a big part of that. The fundamentals is what the buying and selling is then being based on. What that story is of the fundamentals, so such as inflation being higher, suddenly we start to see inflation dropping, that then reflects to those buyers and sellers and say, okay, if that's the case, we should sell this, buy this. Then those emotions start to play out. And sometimes, for example, if fundamentals come out and the price doesn't move as expected, as you're assuming it would, usually means that it's already been priced in by those buyers and sellers, right?
Right.
So it goes hand in hand. I don't think that necessarily... I get it though. It's the classic trading thing, big debates, big polarizing opinions, which is always fun. To be honest with you, it's fun to see.
It is
at times. So there are times when it gets a bit too much, but it's fun to see because it's good when it's a healthy discussion. I think it's good. It's good to be able to have, okay, this is your point, and always, as always, not only in the trading industry, but when we have those moments, there's always like an overlap. There's always like the truth or what should be met in the middle. With some form of balance.
Well, I think if people are like toxic about a certain strategy, what I've found over time is that is more just insecurity about what you're doing. Like if you were sitting here and somebody else was sitting here, and we all kind of had profitability in what we were doing overall, but we all had different approaches, we'd all just be like, hey, do your thing, keep going. But where there's more debate and argument is usually from people who haven't figured it out themselves, but they're threatened by the idea that someone else is saying only this works, and they're like, well, should I switch what I'm doing and go invest my time over there? And it goes back to the track record thing. Track records obviously give you some credibility to sell products. I'm very transparent about that, but also they tell you where you should kind of look to not waste your time. And again, there are people who show performance track records. I mean, Tori has shown hers, and she trades strictly technicals, so she doesn't do fundamentals at all. So there is, in my opinion, it's more about the trader, their amount of effort, their amount of experience, their work that they've done to get to where they're at, than specifically the strategy that they're using, because any strategy has drawdowns, any strategy has good times, etc.
Couldn't agree more. And the interesting reflection I got to have is I recently was reading Market Wizards to prepare for an interview, and I realized that those opinions, because my assumption was that, the professionals are all professional. They have professional mindsets. They're very balanced people, and they, see all things that are possible, and whatever. It's not the case. Not the case at all. Funny thing is that there's so many of the professional traders, especially within those books with those interviews, where they prescribe to purely technical.
Sure.
Fundamentals are useless, or purely fundamental.
Right.
And that technical is a waste of time. And again, it just shows that it doesn't matter. Right? It really doesn't matter.
Right.
As you said, like, you got to focus on yourself as a trader. You got to focus on how you're going to create that edge, and no matter what that is. Can you educate yourself on different things? Yes, of course. And I think obviously a lot of those traders saying those things were from an X period of time, but that doesn't change anything. They just have their belief and perception, which will be based on their experience.
Well, if they said fundamentals don't matter, the probably the right way of saying it really would have been fundamentals don't matter to me. I found profitability without them, or technicals don't matter to me because I found profitability without them. And that's I think the key distinction there to make.
What's it been like building your track record? Were you always public with it from the very beginning, or did you enter social media wise? When was that? Was that a bit later, or?
Yeah, I started making videos about what I was doing in 2020 about it. Okay. So I've kept it up the whole time. When I first built the account, I was very transparent that I was going to be pretty aggressive with it. Right off the bat, I was very aggressive. At some point along the way, I made updates that I am going to really reel it back because the swings were just huge. And after 2022, I was like, okay, I want this to be a long-term account. I don't want this to be an exciting story account. And it really performed really well the first year and second year, and then had a huge drawdown in 2022. And then it has bounced back a lot since then. So it's been, there's some real difficulties to showing a track record that I think I totally understand why sometimes people choose not to. I think that there probably are profitable traders who choose not to show their track record because of the pain that comes with it. Trading is hard enough, like as it is. Like it is so difficult when you're doing it privately. When you're doing it publicly, it is very, very hard but at the same time, I'll talk about that in a second. There's a pro and con to it. The con to showing a track record is that you get like hate mail when you're going through a drawdown, which drawdown plus hate mail is psychologically turmoil. It's really, really hard.
Worst case scenario.
Yeah, because if I'm sitting in there and I'm just making poor trade after poor trade, and then I'm also getting, comments like, why would you do that? That was stupid. And I've gotten those, for years, and it doesn't change what I do because I think I'm pretty rooted in what I do in my trading process. But it makes it difficult. The positive though, and this has been tremendous for me personally, has been sharing a track record has also been a very net positive thing for me. Because I've gone through those drawdowns, I've come out of them. It's helped me to build confidence, but also when you have everyone watching what you're doing, and I'm pulling up every day in my videos and live streams, I'm on my account, I'm placing trades, I'm doing my stuff. You don't make stupid decisions because you can't, and that has helped me over the years is not that it's something that I would really give into, I don't think anyways, but because I still have to be prudent with my risk management and outline why I'm doing certain things to my community and to people who are watching the live stream. I can't just fire from the hip privately, and I think that that's been really helpful to me in my trading, to go through drawdowns, to come out of them, to stick to a plan even when it's going poorly, and really, like when I've gone through a drawdown publicly, it's like all I can do is double down, stick with the strategy, and just hold out until it over time works itself out. So yeah, it's been overall net positive, I think.
So that accountability, it's, as you said, double-edged sword. There's the pressure and the feedback you get when you're in a drawdown or losing trades, but then equally your self-control, because you're on the stage, if you will, and everyone's watching, creates this accountability and discipline increase almost.
Yeah, it's really, really important. I think that even if you're not, if someone who's listening to this is like, well, that sounds really good, but I don't have a audience to portray to, get yourself a trading friend or a trading buddy or somebody to work with, because that's a huge like accountability. I think I also mentioned, like, Frank and we talk regularly about positions that we're in, or what we're going through. And so I think that's also really important, is to find someone, whether it be in person or online, that you can kind of hold yourself accountable with. That's really important stuff.
Definitely. I couldn't agree more. I've always said it, like, don't get me wrong, it can be hard to find the right people, because most people can't. It was actually interesting. I remember I said it to, I can't remember who it was, but we were talking about the same topic on the podcast, and they basically said, most people can't hold themselves accountable. They're never going to hold you accountable, right? And I thought that's a fair statement, definitely a fair statement. But sometimes it's trial and error. Sometimes it's just eventually resonating with someone enough and recognizing that they work hard already, you work hard already. Normally the overlap is there because they're doing enough for themselves already to be able to hold them. They're already holding themselves accountable.
Yeah.
So they know what accountability looks like. But it's definitely a very powerful thing. I think, especially within the trading space, a lot of people get into it alone, because they see ads online and so on and so forth, and therefore they don't know any traders and they don't know anyone to be able to bounce ideas off, have someone who understands the hardship, the struggle, the routine, and so on and so forth. Yeah. So it's a very powerful thing for sure, when used correctly. One thing I wanted to ask you, though, in terms of the drawdown, you had, like you said, you had a year of drawdown. What did that look like, and how did that feel, and what was it down to? Was it down to strategy, edge, market conditions, combination?
It was mostly market conditions. It was 2022 was a huge drawdown in the NASDAQ, as I had mentioned. I went into 2020 and 2021. I made a lot of money being, I was trading in and out of the NASDAQ like constantly. I was even using some leverage. I mean, things were going very, very well during that time. And again, it was hard to mess up during that time. Things was just going straight up. Then NASDAQ in 2022, I kept taking stop losses just because there are many, many different kind of, in my strategy, I'm looking for breaks and retests and simple entries on the technical side, but there would be kind of a splurge of, okay, things look like they're shaping up for a long, they would fail. And then, I find shorting specifically, I trade the NASDAQ a lot. I find shorting the NASDAQ to be very rewarding if you're right, but very difficult to time, because again, the drops are very sharp when they happen, but they're very hard to find, the right entry point. So I made some money on the short side, which helped to cushion the year a little bit. I was short for some of it, but several of my attempts to get long ended up turning into a couple different suspended periods of losing streaks. So I'm not holding like big drawdown single positions. It's more just like getting chopped to pieces, like lots of different little losses, trying to catch breaks, and the momentum there just wasn't forming, and I was just wrong. A lot of my fundamental analysis that year was just, I was just not getting it right, and that happens. There's a little bit of discretion. That's where I think you can pick fun at fundamentalists, and technicals. Discretion has its pros and cons too, but fundamental analysis has a little bit of discretion, because you can ask people in the fundamental space to give a synopsis on the dollar and get kind of different answers sometimes. So
do you think it comes down to the time horizon there? One person might be looking at a month view, someone else is quarterly, someone else is yearly.
Sure. I think you can, get different perspectives on that. Like, you can totally be right in the next 3 months, but wrong in the next week. The biggest criticism, and why I think technicals are still very important, is because fundamentals might tell you like which direction that the market could go, or probability wise could go, but it doesn't tell you when. It doesn't tell you, if a simple example is like, if you really liked Meta stock, it cratered in 2022. Like, it was down, like, I think it was like 70+% or 50+%. It was a huge drop in the stock. You might have liked that stock fundamentally. You might have liked the company and its prospects. It was still a very profitable company on the drop, but the timing would have been awful if you had like bought too early. In the end, it's come back, and that stock has been a really big winner. But again, that's where fundamentals are good for direction, but not always great for timing.
And I remember reading something in terms of a fundamental trader who used technicals for the entry, as they said, and they said that you wouldn't be able to work out your risk to reward, your entry levels, your stop levels, if you didn't have some sort of technical.
Right.
Because otherwise, I guess, how would you base it? Fundamentally speaking, if you were to enter up just off that, where would you enter? Or even if you just entered, I don't know, off the back of some sort of news or some sort of announcement. Okay, but now where's your stop level? How are you getting out?
Exactly.
Or where you're targeting? So technicals has this. They're all necessary, I think. But I would agree with you in the sense that a lot more traders should understand fundamentals, even at a basic level. Like I only recently started learning about inflation thanks to the pod. Like I said, having these fundamental traders on.
Yep.
But I only recently learned. I say recently, like maybe 6 months, more about interest rates. Why at this peak time, interest rates are on the focus, inflation on the focus, what impacts inflation, which would then lead to the interest rates. I truly believe just that knowledge of understanding that cycle of the fundamental side is enough, and that's actually very simple.
Yeah.
When broken down, it's very, very simple in terms of like, okay, this is why this would impact the market. Why would it move off this what seems a bit smaller, let's say PPI or retail sales, etc. Seems a bit smaller, but why is it reacting to this right now? Because it's leading to the next thing, right? Which will be inflation. Okay, why is that important right now? Oh, because it's higher or lower, whatever it may be, but that's leading on to what? The interest rate.
Yep.
So then you just have this chain of information.
It's a story.
Yeah.
That's what I love about fundamental analysis is that the market's story, I mean, you could ask different traders would tell you the story could be found in the price or whatever.
Yeah, same thing.
But for me, it's like very, very, kind of from an entrepreneurial spirit, it makes a lot of sense, like business wise. Like if you told me that they're going to keep interest rates higher, well, if my business was trying to grow and I needed to borrow a bunch of money and it's way more costly, maybe I'll wait for interest rates to come down. That's a force. That's a real thing that everyone, again, I think that where people get it mixed up is they focus on the trader's perspective, but I'm talking about everyone's perspective. Those are real forces that make their way into the market. So the story of, as you mentioned, like if retail sales data is slowing or if it's really strong, that paints a picture, that sets up your environment for I think with fundamentals, you can kind of understand the story and get clues for what might happen next. And then with technicals, you can, like you had mentioned, place stop levels and manage your risk. And again, if I'm looking at something fundamentally and I need something to tell me that I'm wrong, because if I'm just looking at the data, sometimes I can be right overall, but early, and early is as good as wrong in terms of trading, because if you're in a long or a short and you're too early to the trade, to me, I try and cut the trade quickly. Typically, in terms of my technical approach, it's like the standard textbook analysis or technical analysis is what I love to use. I love to use like breaks and retests and higher lows and higher highs, market structure, like the simple, call it retail trading strategies. It has worked great for me over the years. It's just to keep the support and resistance levels very simple. Those are my zones to tell me when to get in or out of a trade. But the reason why I'm entering the trade has nothing to do with just the chart. The why is always fundamentals, because once I have that story, I know where I want to be long, where I want to be short, and then I'm waiting for technicals to just give me the red lights and green lights, if that makes sense.
No, that makes complete sense. And in terms of that drawdown year, what was your psychology like? Especially as it got longer and longer and longer. Like, how was your psychology? How was your mindset? How did you continue to go on? And most people would have quit.
Man, it was hard. It's not fun. But I had some saving graces, I guess, during that time, because while the drawdown itself was prolonged, like it took like some time to get out of, I also have other things going on in my life. And I think that's important for a trader to have, is other hobbies, things going on in your life. But for me also, I had other strategies. And that was kind of my attention seeker that helped me a little bit, which is I was trading some FX. And I mentioned the dollar during 2022. I was very long the dollar. And that was the only thing I really got right that year, was because the Fed kept talking about hiking rates. There was no end in sight. Inflation kept rising. So that story that we talked about was, I want to be long the dollar because there's this uncertainty in the markets, very risk off. We don't know how high those interest rates are going. So the dollar is going to probably like dominate against its peers. And I was really right about that. I was wrong about the NASDAQ. I thought, tech stocks could hold up. I thought that, profitable companies could stay, very, very strong during that time. I was completely wrong on that side, but I had a lot of my focus on FX during that time. I trade a pretty wide range of different things. I trade, indices and commodities and FX as well. So the diversity in markets that I pay attention to, as well as kind of my strategies there, helped me to, I guess, kind of keep my focus somewhere else. It didn't make it like easier, but it distracted me a little bit, which was good because I could still be constructive in some other areas of my life, whether it be the business, whether it be, trading FX, live streaming, getting better at content. As you know, like this stuff takes up a lot of your time, takes up a lot of my time, and it's a lot of fun. I love creating content. It's like it keeps my brain active, and I think content has been really helpful for like my trading as well, because again, most of my time is spent more on the content side, and trading wise, it's just like a 1 hour a day kind of thing for me. And I don't think I ever want to change it from that. I like keeping it kind of shorter in my
Simple,
day. Yeah. In
terms of your strategy though, what I was going to ask you is you talk about returns, right? You say on average 2 to 4% is what people should ideally be going for. So what sort of trades are you taking in terms of risk to reward, in terms of your risk per trade? Because I think, yes, 2 to 4% on average, it should be something that people strive towards, especially, I would even say, on the prop firms, to be consistent, etc. But I do believe people can get more. Now, I say that as a trading perspective, not as like anyone who's promoting high returns.
Sure.
I don't agree in any sort of promotion of to sell a product of like returns. I think that kind of doesn't go well hand in hand. Results, yes, results make sense. But if you're promoting that this is a high risk to reward or this or that or the other, I think that's a dangerous game. But in terms of what's possible for a trader, I do believe that higher returns, not like maybe 10% a month, but even 5-6%. I think it's possible.
Yes. I think
you have to have the edge, etc.
Yeah, I'm glad you brought that up, because I think again, that's usually when I bring up that subject, that's usually a hot topic on my channel. Is if I talk returns, you get all walks of life. Who some people are like, yeah, that's great, and then other people are like, then what am I doing this for? I could, is that really the peak that you think? So I guess I can adjust my previous answer. I say 2 to 4% for me, because that's tolerance wise what I can kind of handle, because I know the drawdowns that I've experienced, what typically comes with shooting for 2 to 4%. If I took the same strategy and upped the risk, could I make more? Yes. But my drawdowns would be nastier and more painful. So it's all, I think, can you make more? Yes. But are you prepared if you're going for 6, 7, 8% per month? Are you willing to accept that on a given year you might have a 30% drawdown at any given time or more? Are you ready for a 50% drawdown? And when you ask people, are you ready for 8% per month? They say, oh, of course. But if you ask them, are you ready for 50% drawdown that could inevitably come with a system like that? They're going to say, well, no, because that's the thing. So I think you have to kind of more reward always comes with more risk in the markets. The markets are just, there's no free money in the market. There's no easy money in the market. When you go for bigger returns, you have to accept that bigger losses can come too. And again, you might have a really profitable strategy overall, but you have to ask yourself, like, what kind of volatility in your equity do you actually want to see? And again, when I started that account, I told you that I was a little bit more aggressive. In my first year, I had several months that were 10% months, or even greater sometimes. I had big months, but the drawdowns were also really big. So at some point, I made many announcements on my, or not announcements, but just kind of discussed at length, like in my own trading, that I had plans to really substantially reduce my position size, to scale it back, and to kind of just, again, you get what you kind of want out of it. If you want more returns, you have to pay up in drawdowns and struggle that comes with it. But I don't think it's constructive to say to other traders like how much they can make, because again, I've self-admitted I'm not the world's greatest trader. I have been profitable over the last 4 years and longer than that. But on this account that I've done publicly, I've been profitable during that time. but it's not like leaps and bounds 20% months every month or anything like that. I'm just shooting to compound money over time. I think also everyone wants those high returns, but they, if they really took the time to understand what 2 to 4% per month can do for you over the long period of time, it can be remarkable. And that's beating the S&P 500, which has also just been like the best stock market to invest in the last 100 years. So you're talking about very good returns if you can beat that. So that's my take on returns. It's what you want to make out of it. Bigger returns, bigger risk.
In that first year with the higher returns, how much were you risking? Were you risking more as well to do it? Or?
Yes, I was risking bigger per trade. I was I mentioned that I was very, very much long on like tech stocks and ETFs that, I was trading the Qs at QQQ and the NASDAQ. I traded Tesla a lot during that year. So I was taking bigger risk, but it was kind of a sweet spot environment. It was a unique time because the world kind of fell apart with the pandemic, but then the Fed came out and just pronounced that they were going to be just throwing money at the system. And I didn't know for 100% sure, but I felt very confident that the probabilities that that money would get injected into the markets were pretty high. Everybody's getting stimulus checks. And so I made, kind of aggressive trades in the direction of where I thought it would go, which was, I think they're going to go into stocks. I think that money is going to get pumped into, people are staying at home. I didn't see everything. Another variable to it was a lot of the high risk, high beta stuff like meme coins and meme stocks and things like that also came with the kind of potential of like sports got turned off. So people started gambling in the markets. So there was a huge surge there. So it was way bigger than I thought it would be. Yeah. But it was, I was risking more during that time. And at some point I saw the swings, be big. And I was like, you know what, I'm just going to kind of revert back to smaller size. I was never taking ginormous trades. I was never like, just being irresponsibly big with my size, but it was much bigger size than I do now per trade on a percentage basis. So, and you asked like percentage wise, like a per trade, it varies for me. So again, I mentioned that scoring system that I have with the tools that we built, the Edge Finder. Yeah. So if I get a stronger read, I might up my risk per trade to a little bit more. And for me, that range might be anywhere from 0.25% to 2 to 3%. So I have a wide range. Just like I have like my entries and fundamentals component, my position sizing varies based on the conviction, based on the trade, but it's never like I'm going to risk 10% of my account on this trade. It's always still, relatively smaller per trade.
So you're saying between 1/4 to 2 or 3%, you say? Is that the risk?
Yep. So like the risk.
So you use a dynamic risk?
Yes, dynamic risk. And I know that's...
I'm quite surprised, based on everything else that you said, that you would have a dynamic risk.
Really?
I was going to ask you, this is a question I've been asking, only because most of the time when people are talking more like consistent, smaller returns, they're normally sticking to like, one set risk, 1% or 0.5%. Sure. So I was quite surprised to hear you say dynamic.
Well, I trade the brokerage that I use, which is Webull, is a stock brokerage, and so it's a margin account. So when I have more available margin, let's say I'm just kind of sitting on the sidelines, I may have a little bit larger of a position size. But if I'm very full of positions, and I want to add something, it's probably going to be very small. So that's another component. So there's margin availability in the account. I don't touch a lot of leverage. I don't touch a lot of margin. I pretty much I almost treat it like a cash account. But in terms of conviction is also kind of a factor for me. Is like, what is this like something that I'm getting like all signals go for something, or is it something that looks kind of like a B level setup, or if it's an A plus setup, I'm still not going to like throw everything on it. I'm just going to have a little bit more size than I would if it was a B setup, which is still worth taking, but not quite an A plus setup, if that makes sense. So there's a little bit of variability in what I might risk per trade, just depending on the factors that I'm looking for in what I'm trading. Yeah.
Well, that's the interesting thing. The reason I've been asking that over recent interviews, over maybe the last couple of months, is because obviously in the research that I do, I'm researching. While most people are researching heavy into the markets, I'm researching other traders.
Yeah.
And
well, you're the man for it. There's probably nobody in the trading space that knows a more diverse list of people. I think that's awesome.
It's great. It's great. It's taught me a lot as well. And one theme I kept picking up on was dynamic risk. A lot of these traders who hit like big figures, not necessarily meaning that they've done huge risk to do it, but over the long period of a career, the ones who've come out with the millions, tens of millions and hundreds of millions, for example, are the ones who had dynamic risk.
Sure.
For the most part. Like, not to say that you can't make that sort of money having just fixed risk, but for the most part, they're all using dynamic.
That's interesting.
Because when they, and there's a lot of it's like not intuition fully, but when they have the data, they've done everything right, they have an edge, and they recognize this particular, call it like alpha, as they say, right? Alpha within the edge. They know, they trust themselves to size in, because the reward as a trader, as you said, like, it was very interesting actually now that we're talking about it and discussing it, it's like, it's hard to make money from trading, right?
It is.
It's hard to make big money without risking big as well. But equally, why do you get into trading, right? Because you want to make that sort of money. So a part of me does believe that if you want to do that, right? If that's your goal, to make that sort of returns, then equally you need to be that person who learns to do everything correctly, of course, but learns to trust that intuition, recognize that alpha, and size in on those opportunities.
Well, it's like I'm not a good poker player, but it's like the kind of theory for like really good poker players is, or blackjack players that count cards. Like it's you know, when you know that you have like kind of the odds on your end, you might slightly size higher, but you still wouldn't throw your whole bankroll on this one hand, because you don't have certainty. You just have, oh, this is better than the other options. This is the number one kind of setup that I look for. So when it comes to trading, there's also another variable that I didn't mention. I like to trail stops a lot with my trades. Like, that's how I manage my trades. Is I mentioned market structure. If we let's say I'm long on something and we break through a huge level of resistance and we're trading higher today, I like to just manage my risk by taking that stop loss and moving it into profit just behind the market structure. Everybody knows exactly what I'm saying, because it's literally the textbook analysis stuff. Like, it's the 101. I'll just use that as my simple way to kind of gauge where, okay, if this breaks, I need to get out of the trade, take profits, or take a very small profit, or even break even. Just depends where the level's at. But then another thing is that I like to add to winners. So you just mentioned kind of from your conversations, and again, you've talked to a million traders at this point, and to hear you say like a lot of them are doing dynamic sizing, I do that a lot now that I think about it, because I'm also adding to a winning trade. So that's kind of like saying, when you've got something that's working, or this one is better than the other ones, adding to a trade for me is kind of that scenario a lot of times. Usually when I have a good trade, because I'm trailing stops, I take a lot of losers. Like, a lot of my trades are small losses pretty quick. If I'm out of a trade within a day or two, almost always it's because I got stopped out. I'm out of the trade for a controlled loss. But then my good trades are usually the opposite. Usually within the first day, I'm well in the green on the trade. And when those happen, when I'm very, very right, very, very quickly, I'll look for opportunities to actually add at market structure levels. So when you ask like risk per trade, I may reintroduce risk to a position if it's going really well, but I really like the trade. Let's say I'm long oil and it's broken out really well and it's come down to a level of support. I've got my stop loss below that level, but I might actually add to the trade, reintroduce more risk to the trade, because now I'm playing kind of with house money, like, because I've got some profits sitting in the account, like unrealized. I may choose to reintroduce risk to that trade, because I liked the way it immediately snapped in my direction. So there is discretion involved. Like my trading approach, even though I would say it's like semi-automatic trading, because I use systems to help me spot fundamental setups and alert me to setups on the chart and things like that. But there is a level of discretion. There is some form of kind of sizing into trades, and I usually will add to winners and rarely add to losers.
I'm actually surprised in terms of the return. Are you doing 2 to 4% a month?
In the last
On average.
this year, I think I've averaged like 1 to 2. It's been a slower year, but in years previously, 2 to 4%.
I was quite surprised though, because based off everything you've said,
Mm-hmm.
it seems like the formula for some higher returns. Do you know, is there a reason why it's slower?
Yeah, well, so most of my returns this year have actually come from trading gold. I started this year with just a really bullish outlook on gold. As we were talking about the fundamental story, I've been kind of thinking that the Fed is going to look to cut rates this year. And that seems to be kind of coming into roost now. We've seen, labor markets starting to cool down, but inflation is still kind of sticky. That sets up for a potential stagflation story, which I love for gold longs because, commodity prices typically will rise during, a period of elevated inflation over the long term. And this is like fundamentals backtesting. I get that question a lot. How do you backtest fundamentals? It's kind of hard, but the way to do it is just to study periods of time in which you have certain characteristics like high inflation.
Yeah.
What does the gold market or commodities world in general look like? It's usually a pretty positive one, not always, but pretty positive. So anyways, my point was saying that is like a lot of my returns will come from like very small number of trades that just go really well. But where I give back a lot is a lot of false starts. Like my pros are like with a trailing stop method, I might have really big winners periodically, but I pay the price in, small losses that can build up and they cause drawdown periods and give back some of the returns. So yeah.
Definitely. No, that's what I love about trading though. It's so different. There is no right or wrong in terms of the markets. And you have to follow your edge. But in terms of your goal, like where you're looking to get to within the trading side, what is it you're trying to achieve? Because so, for example, that one other thing I needed to ask you actually was that 4-year track record, that's on one account. But do you have multiple accounts alongside that? So that's the one that you're publicly treating as a track record, but do you have other accounts that you grow and trade with?
Yep, I do. This is the internet after all. So, even though this is an impressive account size, I don't want to show everything in terms of like, my personal finances. So that's not my only account. But again, it's actually been my best performing account. So there's not an account where I'm secretly doing, way more. In fact, on other accounts, I'm way more conservative. Some of them are just different, marketplaces. Like I'm trading a lot of like sectors in another stock account that I have. So I trade sectors in another account. So I do have other trading accounts and other investment accounts that I kind of use, but I really use that one as kind of my showcasing as well as my active trading kind of staple account.
So if, for example, across all your just trading accounts, no businesses or anything else, just trading accounts, if you were to accumulate them together, would you say you could be a full-time trader just off the accounts collectively?
I could, but I wouldn't want to because it's so boring.
Yeah.
I actually had a period of time where between starting A1 trading and starting the software side of things, I had my little YouTube channel and I was doing my live streams and making videos. And I've talked about this a lot. I think I was making in ad revenue, maybe like somewhere between $1,000 to $2,000 a month. And then I was doing a little bit of work with a brokerage that was paying me like a couple $100 a week. And so this was pre like kind of, like YouTube growing massively or whatever. My channel's not massive, but like where I really kind of grew the business and YouTube side in like 2020 and post 2020. Before that, there was a period of time where I was just trading and I was doing my live streams and I was doing a little bit of work for a broker and I was a solo setup. I didn't have any employees. I didn't have a team. And it was so boring. I really did not actually enjoy that because I'm a people person. I like to create things with people and work with people. And there was a period of time where I had the availability. I could travel wherever I want. I could, I wasn't I wasn't like super, wealthy or anything like that, but I could sustain myself just from trading plus a little bit of YouTube money. At this point, I totally could just trade, but, and I know that that's such a place of like, if I was listening to this, I'd be like, that's such a place of privilege to say like, you didn't want to just sit around and trade. Cause I know that's like the dream for a lot of people, but I think that if you actually live it, like if you actually are just at home trading and it only takes you 1 hour a day to trade, and then what do you do with your day? Everyone else is at their job. Like, it was kind of a lonely life. So I actually got back into an office by design with my team, and it's actually been a lot more fun. And I love trading with people in an office with me. Like, I've got Frank that I mentioned, so him and I will trade together,
discuss and bounce ideas. And
I like
thoughts.
being interactive and creating things, like just like with your content here. Like, it's fun to make content and share trading with a group. I know a lot of times people are like really lonely in their trading. That's totally how I felt too. I was like, I want to get out there and do more than just my 1 hour of trading a day and edit one video and be done by 11 a.m. I know it sounds really great, but it gets kind of boring pretty quick for people who like to do a lot of stuff.
No, 100%, 100%. And I think it makes sense as well, because you have to think about trading. There's no certain. Well, think about that year with the drawdown. That can happen to anyone. A year, a month, a quarter. If all you had was trading, as well, from an income standpoint.
That's so true.
It's not the smartest play, you know. Whether you own a business or whether you do investments, whatever, it doesn't matter. It doesn't matter the avenue that you create income and revenue from, but it's necessary. And I think anyone who relies on one stream of income, long-term wise, if you have a long-term vision, it's a very dangerous game to play. You have to prepare for worst-case scenarios, and worst-case scenario means that one could dry up, two could dry up. That's why they say the average millionaire has whatever, 7 or whatever they say.
Sure.
It's not meant to be cliche. I think it's more, or it's used in a cliche manner a lot of the time. The reality is you got to look at why though. It's not just that the 7 figures of income, 7 streams of income, makes them a millionaire. Maybe each of them doesn't make them a million each, right? There might be one key one that could be trading, let's say,
sure.
right? But then the others supplement it. But most of all, allows the individual who's trading as the primary to have more peace, less stress.
So true.
And longevity, knowing that, okay, if I do go through a drawdown period, if I blow up, because that's always a reality.
Yeah.
A lot of people try and pretend like just because you're a consistent trader, there's no chance you'll blow up. It can happen to anyone.
No, it's so true. And I think what has really been helpful with like doing content creation and having other things that are preoccupying my brain is that when you go into the office and you're sitting in a bad trade and it just doesn't feel good. I remember being at home before, and it's like, if that's like all that you have to do today is trade, you're just going to stare at that, and the probability that you make a dumb decision probably goes up, So for me, it's like I can literally close out of my charts and I can go preoccupy myself with like the editing team and what they're doing and like chat with them about like different camera angles and things like that. And that is so constructive, I think. And it probably has made me a better trader to have other things that are going on in my day. And for people who are listening, if you are a full-time trader, like maybe you have kids, maybe you have a sport that you really like, I really encourage anyone who wants to be a full-time trader to, whether it be another source of income or just something that keeps your brain active, it's huge. Like maybe you're a musician and like you make videos about your music, or you just record songs. Like something is really important to keep you away from making dumb decisions. That's really, really important.
It'll protect you from yourself.
It really does. And it's again, I think like just sitting around staring at charts for too long is just it's a really dangerous. You're just more likely to make mistakes. I think like the less is more is really, really applicable in trading.
I subscribe to that as well. Like keeping things simple, I think is so important, because like trading itself is already so complex. Why would you want to make it more complex? And even the time wise as well. I get it in the beginning, like you want to put more time in learning for sure. But I believe once you've become adequate enough in your knowledge and your testing and your edge and everything, you've done all the work at this point, then now the thing you have to do is step away.
Yeah.
Right. You need to slow things down and just focus on what your windows of time of trading, your instruments, your research. But then outside of that, as you say, fill your time up, get your hobbies, get your things that are going to keep you preoccupied and stopping yourself from making mistakes outside of your plan. And I think that's a large part of success just comes down to self-control, self-control and self-discipline and awareness most of all.
And you know, even it's self-awareness, especially because I've been doing this for a long time, and I still, the emotions don't go away. Like I've done this for a long time. Things are still painful. It doesn't, you don't get, you don't just magically wake up one day. I remember my fallacy of thinking what profitable trading looked like versus what it actually is so different, because I remember thinking like, man, what are the smart traders, what do they know that I don't know? Like what secrets, what do they see on the chart that magically lights up when to buy and sell? Like I remember that being my early days, my YouTube search. If you click the search bar, you would have probably seen searches like best entry signal Forex, best entry signal stocks, like, because I was always looking for, my thought process was like smart traders know what the market's going to do. Like there's some sort of like magician that can just pick the markets. And that was not true. But then also I used to think like, wow, how do they stay so calm when they're trading such big size? And, you know, that's incredible to me. And it is, it's not that they don't feel emotions. It's that they've learned through awareness of themselves how to manage, how to control. Like if I take a position, like staring at it too long can make you make bad decisions. Like it's little things like that. Just learning yourself as the driver in this thing. So.
And I think as well, to touch on your point, is that they still feel emotions, sometimes even very heightened. The difference is that they can observe it quickly and bring it back, versus, let's say, when I did it back in the day and I'd blow an account, that feeling might be, I remember the first time I blew like a big account, that lasted like 3 days of just negative, like really feeling down. 3 days.
Yep.
Then I did it that often that I became more numb to it, and I'd get over it like in a couple hours maybe, which wasn't a good thing by any means. But when you've done the skill set and you build that self-awareness up to a particular level, suddenly you might feel heightened for a moment, but you observe it quickly. Hey, you made the mistake. You connect the emotion to where it came from. You made the mistake here, held on too long, sized up a bit too big, outside your trading window, whatever the mistake was that led to it, and you bring it down. Or equally, maybe you didn't make a mistake. Maybe it was just a case where it was just the trade lost, but you felt a bit more emotional than normal, and you say, observe, you did the right thing, bring it down. And I think that's the key difference between, as you say, like the fallacy. I created loads of fantasies when it came to trading, and one of them being like when you finally get that big profitable trade or profitable month, everything changes.
Yeah. And it's so much more gradual than that.
Yeah.
You know, like your P&L doesn't just magically become ginormous. It becomes like slowly bigger over time. And then you run into a drawdown with this bigger size, and you're like, oh, now I need to like step back and learn how that feels, because it's percentage wise it might feel the same, or it might look the same, but when it's a lot more money, it can hurt a lot, and then you have to get used to that. And I think that a lot of times traders make the mistake of just jumping right into too big of a size that they shouldn't be, or like trading an account that they shouldn't be. So I think it's a common mistake for sure.
Try and use an analogy off the back of that. It's like, imagine professional sprinter, right? They don't just go straight into the Olympics. They go through all these leagues, they go through all these different steps that they'll be used to. Like, okay, let's say someone was a high school runner, a track runner, and they're used to that level of intensity, that level of crowd, that level of speed even, and skill sets around them. You throw that person straight into the Olympics, they're going to feel overwhelmed, right?
Sure.
And even if they perform semi-well, they're still going to feel overwhelmed. They're still going to have things to learn and adapt to and change to. It's a bit of a random analogy, to be fair. But
no, I think it's fair, because also, that person who's made it to the Olympics, it's not that they've just done each of these things sequentially. They've done each of the things and failed and had horrible down moments, and like, if I had just done this right, I would have won that race or whatever. So I think that when you look at somebody who is trading and making a lot of money, like overall, that's another thing that you could do a whole kind of discussion on, which is basically like comparing yourself to other traders is so dangerous, because when you look at somebody who's making $10,000 a month on average or something like that, or $100,000 per month or whatever, it's easy to be like, well, why am I not able to do that? Why am I so far away from that? But the trials and tribulations for that person to get there. Behind every trader that looks like that has gone through just like a internal war to figure out how to get there. Like it's been such a journey. And by the time you see them on social media, that's the thing about social media, is by the time you see somebody on social media, they have gone through their battles to get to that point most of the time. It's very rare that somebody just magically pops into the scene and they're like, oh yeah, I'm a 10-figure trader making bajillions of dollars, like that. It just doesn't come out of nowhere. It usually is a process. Even if you go back on my videos, you could scroll way back and see that the trade size that I was trading years ago was much smaller, and that's been a journey for me. So, I think comparison is just such a dangerous path, because everybody is on their own timeline. Everybody is figuring it out for themselves, going through their battles, figuring out, what drawdowns feel like. So it's very dangerous to just look at somebody's end result compared to your current
You have
one.
to compare to the full picture. Comparing anyway is a dangerous game, to be fair, because regardless of trading, we're all individuals. You can't compare to, you had 2 parents growing up, I had 1. Like,
exactly.
How can I compare to where you are versus me, and what difference does it make anyway?
Yep.
But if you're gonna do it, you gotta look at the whole picture. You can't pick one point. It's like people like me, for example. People might think, he's always had this podcast, or the podcast was the first thing he ever tried, and that was successful. I failed at so many actual businesses, lost so much money before podcasts, and even then, I've been posting for a long time before the podcast, different content, didn't really work out. I've been posting and had the same mindset 10 years ago, but which is on my Facebook memories thing, But people don't know that, of course, which is fine. But I think, as you said, rightly so, comparison is a very dangerous game in the trading space in particular, but generally in life, it's a very dangerous game anyway, because there's nothing to compare. Like you are you, and they are them, and that's it. And then you can mastermind, and accountability, that's where we can join together and be stronger. But in terms of comparing, it normally leads to like envy or jealousy or resentment for your own stuff, in your own life.
Sure.
So it's a very dangerous. I don't see where it's good in terms. Inspiration is a bit different. Normally, inspiration comes from the fact that you looked at the bigger picture, and you realized, that person went through what I went through, and they're there, now I can go there. So inspiration is like the same thing in terms of comparison, but it's with a different perception, I think.
Yeah, that's for sure. And I think also, with inspiration, that keyword in the trading space is it's an interesting one, because with inspiration, you get the kind of like living the high life as inspiration. That's another area that's interesting, because sometimes when you see people in the trading space who are showing off this lavish lifestyle, they, as everyone knows, like not all that money came from trading. So like maybe a lot of it did, maybe some of it did, maybe none of it did, but you don't know. And so that's the danger of social media and comparing yourself too, is you see somebody who's living this crazy lifestyle, and the first thought as you're very new to this stuff might be, oh, well, if I just get really good at trading, they went through this journey and that's how they got there. But that can also be a little dangerous. Like just looking at an influencer and saying, I want to be like that person, sometimes you have to kind of like peel back the layers a little bit and just understand like an influencer can be selling you something. Again, that goes back to the track record thing, is like, I don't care if you show whatever, as long as you actually show that you actually trade and make money. That's all that kind of matters. And then I think, like you said earlier, like it gives you the hall pass to do whatever you want.
It really does. No, it really does. And I think it's a powerful thing. I think if anyone wants to be able to very openly and, sort of chest out sell anything, best way to do it, just have a track record. I get it though. I truly do. I get it from when some people say, or a lot of people say, like, what's the point? People are just going to call it fake anyway.
Sure.
It's a very true statement, very valid statement.
It is true.
But I feel like equally as well, what harm does it do you, People call it fake. People calling you fake without it. True. They'll call you fake with it. I get the point of like, what's the point then? But equally, it helps. There will be some who will look at it and say, wow, this is incredible.
There's a window right now, I think, where you can still show track records over the internet pretty well and it be pretty dang trustworthy. Mm-hmm. But with AI, eventually it probably will get ruled out. Harder. Because like right now, if I pull up my tradingview.com and I log in directly to my brokerage on there and I click around buttons on a live stream, like you can't fake that. Like that's going to be incredibly I mean, maybe you can if you're super brilliant with like software stuff, and like you could build out like I don't even know how you would do that, but like TradingView's integration with a regulated brokerage, log in, clicking buttons, live stream, like that's hard to fake. Maybe in the future, AI, I don't know. It's a crazy future for that really side of things. But really I still think that there's like a window now where people can do that. They can pull up live accounts and still be very transparent. I mean, you're always going to have people say, oh, well, you can still fake it. So I don't know if you heard this story or saw my thing on my Twitter, but somebody tried to say that my stuff was fake. And it was an interesting story. So the reason that I did the interview with Tori and the interview with Marcos, because before that, somebody messaged me on Twitter or tweeted out that, hey, this guy's account is fake, that this is nonsense, that I can prove it's fake, and I bet you $6,000 that it's not real. And I was like, I don't want your money, but it's real. Here's how it's real. Live streams, this is this. And he's like, no, it's fake. Get on a call with me otherwise, and show me on a Zoom call that it's real, or you're not real. And I was like, okay, but are you going to actually pay the $6,000? And he was like, I will do it. We got on a Zoom call, and he paid the money.
Really?
So yeah, and then that was where I then turned around and I said, I'm going to pay out other influencers with this money. Cause I mentioned to him, I was like, I'm not trying to be toxic with it where I'm just like trying to like, haha, I got you, give me your money kind of thing. I was more just like, if you really think it's fake, I will show it to you, whatever you ask. He pulled it up. I logged into my portal and all that stuff with him. And he was like, all right, that's legit. And then he actually that same person ended up helping me like, later on. He was like in support of the mission of like, let's encourage transparent trading.
Is that person like an influencer type?
No, just a random guy. When he got on the call with me, had mentioned that he managed some money for clients and that he was just kind of sick of a lot of the fakeness in the industry. And I was like, I totally get it. So we have kind of pushed that challenge to other people and been trying to start a little bit of a transparency movement, I guess.
Fair enough. No, I think it's good. I think right now as well, it's needed more than ever. I think it's a good window. Anyone who does have a track record, now would be the perfect time. If they, especially, because at the end of the day, look, you can have the track record, but part of the goal of posting online and posting a track record online is that you use that for credibility to be able to build a platform for whatever reason, whether it's a podcast, whether it's a service, whatever, whether you just want to have a platform to be able to speak to more people. So if people are looking to build a platform and they have the track record, I would implore them to post it now, because there's an opportunity right now for that gap to be filled. And if the people who do it will hopefully rise quite nicely and be able to achieve those goals.
Yeah, I think so too. And it's when I was talking to Tori about it specifically, we were like, there's two ways you can go about the track record concept. You can be toxic with it and like point out people that, oh, you're fake because you don't show one. You can do that approach, but I think that that's just like a very negative, like bad way of doing it. So we were both on the same page. Like I think like positive reinforcement, like let's offer cash rewards to people to step out and be brave. Like that's kind of cool. And then of course on our end, that's been like like on my team side, we've taken that as an opportunity to like pay influencers to do these awesome collabs. So like the collab with Tori was awesome. Like it got a lot of eyes on our stuff, our content. So it was like a positive and a win-win for the community as well, I think.
100%. I hope this will be as well for you. That is the goal. We're taking by the time this comes out, the rebrand would have happened actually. So we rebranded the podcast. Name's still the same.
Oh, okay.
But I was reflecting last year, end of last year, start of this year, of like, I feel like I need to get more institutional, professional, more focus on quality of guests and track records and so on and so forth. Because my thought process was like, no one really shares a track record. If I had to go down that route, there'll be no one left. I would have no one.
Yeah, you'd run out of people.
So it was like, okay. But then equally, you just push for it. You have to go find it. So it was kind of more like a limiting belief.
Yeah.
Plus I thought, like, why would anyone in the professional realm, ex-bankers and institutional traders, hedge fund traders, why would they want to sit with me?
That's fair too.
Right? So in my head, that's what I was saying. But in reality, it was like the complete opposite mindset I would normally have, because my normal mindset, and as it is now again, is like I can do anything.
Yep.
So that's where I've gone, and I've already got some. So you're part of the rebrand, if you will, the the track record, and it's going to be incredible. So like by now, the whole podcast will have a new look, new thumbnails, new everything, new quality of guests.
Yeah, that's so exciting. And I think also a lot of those types of people, who like myself or people like that, we love the markets. We like I genuinely have such a passion for this stuff. To me, it's like, I would do it just because of my love for the community and like I want to see, more of that. So I'm happy to contribute in that way. And I hope that more people, who are that level, like who love the markets and love the idea of like sharing it with a niche that's more serious about this stuff. I hope that becomes a bigger thing.
Definitely. Well, Nick, I appreciate you traveling in here today for the podcast, first of all, giving so much to think about, topics. I think it was a really fun little, I wouldn't even call it a debate in a sense, but like some good back and forth there, I think, that people can pick up on. But we'll have your links in the description below, so make sure everyone, you go check those out. 100% verified trader. It's necessary, but yeah, everyone, thank you for tuning in. Drop a comment with your biggest takeaway from this episode. There'll be other links on screen to the day trading show and past episodes as well, and make sure you hit subscribe. And until next time, take care.